Hello, welcome back to this episode. And today we are going in for the next hands on that we learned. So, these are the details that were given. These are the details that were given. So, we are to get this output data. This format is just like the mortgage house loan that we did. And I'm reminding you that if in case you have not subscribed, you see when you subscribe and then you like, and then I'm there and then I see the notification, but someone has liked the video, I feel like what I'm doing is it's worth it. But when you don't see anything, it looks like I said it didn't go well. So kindly subscribe and then click on the like button. You can just write something under to motivate me too, and I would really appreciate it. Yeah, so this data over here and the one that we did, they were not different. There's no difference in between. So this and this were just like this. Do you understand? And the reason why they are the same is that the reason I'm saying this is you need to first know how to get the figures. So you don't have to put it in your mind that, okay, it is B minus C. It shouldn't be like that. Do you understand? It shouldn't be like that. So the only difference is that here it's like this. Let me do it like this. I want to do something. Oh, where is transpose? Let me see. So the first one that we did, it was like this, where input data will be at the top. So cost, down payment, APR rate, number of rate. You see, it was like this. And then there's this ones to follow. This ones to follow. These ones will follow like this. And then you'll be deducting. Do you see it? You'll be deducting and then multiplying and then keying in. So it's the same thing that this time around we have done it like this. So the most important thing is for you to understand that we are deducting the cost. We are deducting the down payment from the cost. Not we are deducting B from D. It shouldn't be like that. I hope you get it. Okay, so this is what we are doing this time around. And this one, it's on car. So they told us that the car was purchased, or the cost of the car is 135,676. Down payment made was 10. The APR rate, that is the annual payment rate, was 4%. The number of years for this car loan is 30 years. And then the payment per year, we are paying 12 times per year. So you have these details. I know you know how to change this color, how to bring this Ghana cedis in front and everything. I'll do a short video on some of the tricks after this so that you can master it separately. So now we come to the output data, just as I did it over here. So here, what we are going to do is almost the same as the previous one. So we are deducting this from this to get the amount of loan. So the amount of loan is just like previous one. It was what? Finance amount or amount finance. Let's check it. Amount finance. So it's just like that. So when you go to the exams and then the name change, don't say they didn't ask us to find the amount finance. It's just the same as the amount loan. All right. So how did we do it previously? We deducted the down payment from the cost of car. So it's equal to, just as I said, you can just type the B2 minus B3. And then you get this. So this is deducting this from this. You can select it yourself when you key the formula, or you can do it directly. The next thing that we will do is the periodic rate. Now here we have the payment per year and then the APR rates, and they are calling for the periodic rate. So the periodic rate is the rate charged anytime that you go and pay the loan. Do you understand? I think we've done it previously. So this periodic rate is that, you see, we are paying it for a certain period of time. And then we want to ask, anytime you go to pay the loan, what is the rate charged? This time around, we want to compute that. So we want to know indirectly, we want to know the rate per month. And if you know the rate per annum and you want to change it per month, what we will do is to do what? Is to divide it by the number of payment or month. So here, as we have already stated, if you are taking in any cell that are not relative, you have to log them fully. You have to log them. So take note of that. So here, periodic rate, we may not lock it. Why? Because we are not going to drag it anywhere. If the loans were many, and then we come here, then we have to drag it here, then we can lock it. Do you understand that? Okay, so locking it or not locking it, they will give you the same results, and the results will not change. This is because you are not going to autofill any cell. So here, I don't want you to tell me that why did you lock, that's why I've stated it. So here, the periodic rate is 4%, and they said we are multiplying it by the rate per year, and this is what we are going to get. And this one should be in percentage. Did I key the right thing? Yes, it should be in percentage. So this is it. Yeah, so in case you want to reduce the decimals or increase the decimals, this is where you go. Now you go for the number of payment period. Just as previously, they are saying we will pay 12 times in a year, but and then you'll be paying it for 30 years. So you multiply this by this. And that one, I think by now, you should get used to this. Yes. Yeah, I believe you're okay with this one too. So the number of period 2 should not be in Ghana cedis. It should be maybe numbers. Yeah, it should be in numbers. And number of payments should be in decimal. Now we come to the monthly payment. The monthly payment, previously I told you that the monthly payment, we have a formula called the PMT formula. And that is what we used for every monthly payment. So it's equal to PMT formula. And then you bring your bracket. The first thing is the rate per month. So this rate is per month. Do you understand? This rate here, the periodic rate or monthly rate, it's the same thing. If you like, and maybe you are old-fashioned, and you only know that you take the monthly rate from this one, then you have to divide this one by 12, which it has already been done here. So the rate, you pick this one, and you bring the comma. The end pair is the number of payment period, or the number of times you are making the payment. Previously, we will multiply this by this, and then we will lock it, remember. But here, we have already solved for that one. So you will just bring that one too. And then now the present value. As we know, the present value previously was the amount financed. So the present value is the amount that everything is charged on. Do you get it? Yeah, the amount that everything is charged on. So as we know, it's this. Remember the negative sign. Because we want to find out the numbers to be positive. You are done. 600. I doubt it was 600. Because I quite remember the number was not 600. Oh, I'm told it's 600. Okay. So now you come to the total to repay loan. Total to repay loan. And then total interest paid. So now, they said you are going to pay a monthly of 600. You are going to pay the loans 360 times. And they're asking total to repay loan. This English I don't understand. But it's just as it is. They are just trying to ask you the total payment, the total loan paid, or the total loan to be paid. Do you understand? So that one too, you have to multiply this one times 360 times. So it's equal to this times this. Then you get this. The 360 is not a circle. we we multiply this by this. For some of us, we will say it should be half of a circle, 180 degrees. And now they are asking that total interest paid. Total interest paid. So now we want to know the total amount of loan that was paid. The total amount of interest that was paid. Sorry. So how are you going to compute for that? Come in. Okay, maybe. So sorry. We are going to compute it by deducting the total amount we paid from the loan that we were financed on. So this one will be equal to, okay, so let me explain. We paid a total of 216,000. The loan we took is 125,000. That's the charge interest. So we want to know the interest that you paid on the amount. So let's say you went for a loan. The loan was 10 cedis. I think mathematically you guys will understand. Yeah. So we want to deduct this from this because I want a positive figure. And then you get this. I think this is not the right amount. Okay, I was comparing it to the one that in the book. Then I realized that the book's figures were different. If I'm correct, I think the figures in the books were different. Or I don't know if maybe I keyed the wrong figures from the beginning. Okay, so I think this is where the problem started. The loan amount was not 1356. The loan amount was 150,000. So just key it there. And then the down payment was 10,000. So I think that is the reason why I was having a different amount. So that is because of the loan amount. I hope you get it. That is because of the loan the cost of the loan. So the understanding is the most important thing, because I realized that the figures we got in the class was quite different. So I wanted to confirm. So now we want to look at another thing, that is the one variable APR. So with the one variable APR, what it means is that the rate is not stable. The rates fluctuate. So let us use the dollar rate for an example. Today you'll find out that the dollar rate is 8%, 8. Yes. The next day you hear is 8.2. The next day you hear is 8.5. The next day you hear it's 10. And all over. So what we are saying is that normally people can come and then the rate is not the same. And there are factors that can change the rate. So they will ask you that, oh, apart from this 4%, right? So can you make it 4.2%? What would be, when you come and then the rate is 4.2%, what would be my monthly payment if I'm still taking the 150,000 and the 10,000 down payment? I hope you understand. So we want to create a table, just like I said in my previous video. I said that when we were doing our undergrads, where some of us were able to do financial analysis and then financial management, we got to we experienced the present value or discount factor table behind every exams question, where you have a clue on the percentage discount factors for some percentages, normally from 1 to 10 or so to 15 or something like that. So in this case, the bank too want to create something where if someone comes, they can just look at it and say that, okay, if it is 4.2%, then the monthly payment will be this and this and this. Okay, if it is this, the monthly payment will be this and this, and then the total interest will be this. They just want to create something like that. So we want to create a substitute APR. We want to create a substitute what? APR. And with that, we can compare based on this results to compute for the monthly and then the other payment. So we start with APR. This is the APR. So the APR will start from 4%, which is already in existence. So now we want to create a sequence, and the sequence will be from 4.0 up to, I think we did it up to 8, yeah, if I'm not wrong. So to do that, we click here on the cell, we go to the home tab, then we select fill. We are filling what? We are filling what? A series. So you click on the series, and then you go for column. We are filling the column. We are not doing it like this. We are doing it like this. So column, and the step that we want to add is, I think, 0.25%. And then we are doing it up to 8%. Then you select enter. So it will be like this. Don't say it didn't work. It worked. Highlight it and then increase the decimals. So all of them will come. I don't know if you did it up to 8 or 6, but I just did it up to 8. So based on the request from the question or your bank. Now what is here is that what we will key here is, if it is 4%, what will be the monthly payment? What will be the total repay loan? And what will be the total interest? And for us to get this, since it's only one variable that we want to change, we have to bring the formulas that we have already entered for the 4%, so that the system will use it as, should I say, the base, or to compute for the rest. So to do that, you select here, you key the enter key, and then you select monthly payment first. So monthly payment. So the monthly payment will come here. This one. The next one is what? The total repay loan. That one too will come here. The next one will be interest paid. That one too will come here. Oh, the reason why this thing has already come is because I have customized it. So let's make it all accounting. So this is it. This is what will happen. This is what will happen. Because this is what is here. So you have brought this here. Trying to tell the system that what you are about to do, you should use this one. How this formula came up to generate the ones that you do over here. I'm sure it's well understood. So now what we need to do now is to select the whole cell and then create the one variable table. And that is exactly what we are about to do over here. So please bear with me. Don't lose focus. It's very simple. So what we will do is, from here, we are selecting everything here. Please look at this very well. We are selecting everything here. And after we select them, we go to data. And then data, we go to what if analysis. So what if it is 4.25? What will be the answer? What if it is 5? What will be the answer? What if it is 6%? What will be the answer? Do you understand? So when you go to the what if, we are looking for a table. That is the data table. So you go for the data table. And this is what we want. Now, we have the row input cell. And then we have the column input cell. Now, what we are looking for is on the basis of the columns. The variable that we are selecting, we have listed them on the column. So we are telling the system to get out this result based on the column. If you choose this one based on the row, actually you don't have anything to do over there, because that one you need to do it based on these ones. But we are not computing this based on this. We are computing this based on the percentage. So you select the percentage from here. Don't just write 4%. You were not told to just write 4%. You were told to key this one. And then when you key it, because these things will be dragged all over, please, and please again, lock it. So when you lock it, you are going to get $B$4. So equal to B4, then you lock it. Okay. So, okay, I think automatically this one will lock it for you. So equal to B4. Okay, it will automatically lock for you. Yeah, so you see, I already have the understanding that since this thing is not there, I have to lock it. So since they have locked it, don't go and press the F4 again, as it will remove some of them. And then you click OK. So this is it. Normally, when you do yours, this is what will happen. I think my formats, my cells have been formatted. This is what will happen. I think the question requested us that you do up to 6. But I did it up to 8. So this is what will come. And when this comes, since you already know how to change the Ghana cedis and then everything, now why then? Why am I free? So you just go for the Ghana cedi sign. Maybe no decimal place. And then you are good to go. So this is it. So the amount paid is this monthly. If it is 4.25, it is this. In 4.5, it is this. So it is till the last percentage that you yourself set for. Now, there's something that we want to do. We don't want to find these figures here. We can't omit them. This function needs to be here, but we don't want to find it like this. Because if someone take this sheet, how would the person know that this is the amount paid monthly? And this row. And how would the person know that this is also the total repayment loan? And how will someone also know that this is the total interest paid? So because of that, we need to customize this, and this, the heading alone. So you don't have to delete, because if you delete this, everything here will also be affected, because everything here is based on this and this that give us this. So 4% on whatever is here give us this, as at this. And then it's, you see, this and this also will be the same. This and this two will be the same. Then the rest of them will be generated. Because 4% monthly payment is 668, exactly as this one. Exactly as this one. Exactly as this one. So it means we need to now touch this one alone. And to do that, we need to customize or custom this one. So I can customs. So formatting this cell, we click this one, and then you go to customs. Here, you just have to edit everything here, delete them, the type bar, delete them, bring this quotation marks, and then type, the first one is what? Monthly payment. So monthly payment. And then you close it with the quotation marks, and then you click enter. So many of you, when you do it and it turns out like this, you think you've done a wrong thing. Just open it. And you are good to go. So it means this is the monthly payment. You come here, you do the same thing. Custom. You delete everything here. So the delete, you just click here. Don't key 1111. You see. You delete it. Then you come here to key the next thing. And the next thing is what? Total to repay loan. Then you bring it down. Enter. You are gone. The next one, you customize it. You delete everything here. And then you type in, then you type in total interest. Paid. Then you bring it. So this is a sample. And then you just click enter. So you're done with that one too. So you can now do your design. Just make this one, let's say yellow. No, yellow is somewhere. So let's make it deep green, and the color white. Then you bold it, increase it a bit. Then you stretch this one. You can just double click them. Open them up. So this is the one variable table. So try your hands on this over and over again. Get used to this. In the next session, we will look at the two variable and then the goal seek. So thank you for watching. I want you to subscribe to this channel. Do well to do that. And then like the video too. It also help other people to also get the existence of the video. So thank you very much.